Hi everyone, I'm in the offices here at Smile and I just thought I'd make a quick video answering a few of your questions. And the question we're going to look at today is, how do you know the fundamental turning point? So what a lot of people have been wondering, well, a lot of people are aware that I obviously trade the fundamentals. We're always talking about how important the central banks are and what those fundamental things of each currency are, because that's going to give you the long-term trend, and it's very important to try and trade with that long-term trend. Now, the question is, for example, let's use the US dollar. In 2015, the US dollar was considered largely a bullish currency because the Federal Reserve were going to be one of the first banks to hike their rate. So the trend for the dollar was up, but very often in the short term there'd be some bad news reports, there'd be comments, there'd be whatever it was would drag the dollar down, and in the short term the dollar would sell off. And the question is, how do you know when the dollar sell-off is just going to be temporary and the fundamental trend is intact, or the fundamental trend is actually changing and you should now be selling US dollars in line with the bigger picture? How do you know when it's just a temporary pullback or whether it's something to be more concerned about? And the simple answer is it all revolves around the central bank. So what you need to do is you need to be aware of two things. What the central bank are doing right now with their monetary policy, with their interest rate. Are they going to put their interest rates up, or have they been putting their interest rates up or down? Have they been leaving their interest rates where they are? Have they been implementing monetary policies that are considered negative or positive? So, for example, quantitative easing. Lots of central banks have been doing that in the years after the financial crisis. That's very negative for a currency. So you have to work out what the central bank have been doing up to that point. That's the first thing. And then secondly, this is the most important thing, what are the central bank going to do next? That's the key. So if you can figure out what the central bank are going to do next, that will be your long-term trend. So for example, the example of the dollar that we just used, the dollar in 2015 is a long, uptrend. Now, if the data came out bad, and then there was some negative comments, and then all that pointed to the Federal Reserve not hiking their rate and actually going back to neutral, or even going towards something more dovish to cutting rates, that would be the time when the trend would change, okay? So it all revolves around the future expectation of what the central bank will do next. That's the key. So you need to know what they're doing now, but most importantly, what they're going to do next. And as soon as what they're going to do next changes, that's when you know the fundamental picture has changed, and you said